A lot of people think that they know what a reverse mortgage is and how it works, but I'm here to tell you today, a lot of people are wrong. That's why I want to talk with you about the top 5 misconceptions surrounding reverse mortgages so that you could separate fact from fiction. Let's get going. The number 5 most common misconception about reverse mortgages is that you cannot use a reverse mortgage to purchase a home. Yes, you can use a reverse mortgage to buy a home as long as it's your primary residence. Back in 2009, the Department of Housing and Urban Development allowed people to purchase homes using the Home Equity Conversion Mortgage. It's called HECM for short. That's the acronym. And that's the FHA insured reverse mortgage program, so that people can use it to buy a home, and then the new reverse mortgage is on the new home that you're purchasing. Okay, so it can be done. It's kind of an in-depth process. If you want to learn more about it, click on the link below this video and it'll take you to my site that goes into all kinds of details about how it works. The number 4 most common misconception people have about reverse mortgages is they think that if the bank makes you a reverse mortgage loan, the bank owns the home and you're just staying in the home rent free. No, that is not the case. You still own the home. I once had somebody call me and they said, if I get a reverse mortgage and I get a leak in my faucet, who do I call? I said, a plumber? Because it's still your home. You can add a bedroom or paint it purple, whatever the case may be, it's yours. And because it's yours, you have to know going into a reverse mortgage, in order to stay there, you have to continue to pay your own property taxes, your homeowner's insurance. You have to maintain the home, live there as your primary residence, and keep your name on title. As long as you do those 5 things, you never, ever, ever have to make a mortgage payment on the home, okay? Now, the 3rd most common misconception about reverse mortgages is that you can outlive the reverse mortgage. No, you cannot outlive the reverse mortgage unless you live beyond 150 years old. However, you can outlive the money you get from the reverse mortgage, unless, there is one caveat with that, because there's one payment plan where you could receive a monthly payment guaranteed as long as you live in the home. No matter what happens to the equity, no matter what happens to the value of the home or anything. That's called a tenure payment, T-E-N-U-R-E payment plan. But other than that, you could outlive the money, but you can never outlive the actual loan itself. You can continue to stay there as long as you do those things we talked about before. Pay your taxes and insurance, maintain the home, live there as your primary residence, and keep your name on title. If you do those things, you can live there. You never have to make a payment on the home. Actually, and as long as you're doing those things, it doesn't matter what happens to the equity in the house either. The equity could go down and the loan balance goes up because you're not making payments. You're still charged interest on and mortgage insurance on the loan. But with the FHA insured home equity conversion mortgage program, if you've got money that's coming to you, even if you're upside down on the house, you owe more on it than it's worth, that money is still available to you, no matter what. So, and you can never pass a debt beyond the value of the home to your estate or your heirs. So now the number 2 most common misconception about reverse mortgages is that they're only for desperate people. No, that is not the case at all. They are not for desperate people. Maybe 20 or 30 years ago, a lot of people used them when they were in a desperate situation because they didn't understand the financial planning aspect of reverse mortgages and how beneficial it is to start it early and things of that nature. But this loan, today's reverse mortgage, is not your grandma's reverse mortgage. This loan is designed to be part of an overall holistic financial plan that allows people to maximize all their assets, including the equity in your house. The goal of incorporating your equity into your financial plan is to relieve financial stress so you can enjoy a stress-free retirement, doing what you want to do in your own home. Number 1 misconception with reverse mortgages is that the bank will take your home when you die. No, That is not what happens. I've been battling this misconception since I started in this business back in 2003, and it's still going on today. But what happens is your heirs inherit the home, just like any other loan. A reverse mortgage simply has a lien against the property. And when you no longer live there, when the last borrower permanently leaves, that's when the loan comes due, unless there's a non-borrowing spouse, and there's rules around that. But your heirs inherit the home. And there's a process for them on how they settle up with the lender. They can sell the house to pay off the balance and they keep whatever equity is remaining, or they can keep the house even. They just refinance the reverse mortgage and pay it off with a conventional mortgage. There's a process for it, and your heirs have options. Hopefully this video helps you shed some light onto the reverse mortgage and separate fact from fiction, and allows you to open your mind to the possibility that a reverse mortgage might work for you. Remember, it's intended to relieve financial stress. I went over these concepts very, very briefly. If you want any more information, please click the links below or give me a call. My phone number is below as well. Thanks so much for watching. I appreciate it.